Money FM 89.3. Best of breakfast. Companies to watch.
It is companies to watch indeed, and we've got lots to watch out for these days, and helping us out as usual, Dan Koh, good morning.
Good morning, Ryan Huang. Happy to be back in the studio with you again on Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that calls for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. 8855-0893. Text us and tell us whether you think it's going to be a hot or not.
Yeah.
Okay. Today is going to be an exciting one.
Something trendy, is that right?
Yeah. How do you keep up with trends, right?
Yeah, social media. I see what people are talking about.
Yeah.
So that feeds into, I guess, my data of sorts, what's popular these days.
Let me just ask you a question before we start. I mean, did you or were you on board the previous meme stock rally?
So I knew about it. I read about it, but I was too unsure about it to jump on board fully. So it's a bit like a scary roller coaster ride. Do you want to get on? Do you want to get off? No, am I going to miss a bandwagon?
Yeah. Okay, Ryan. Looks like we've got a new meme stock in town.
What is it?
Opendoor Technologies.
Opendoor. Is it a tech company? What's going on here?
It's a tech company, it's a real estate company, a mix of sorts. But basically, they have emerged as the market's latest so-called meme stock. And that's a term that's used to describe GameStop and AMC Entertainment during the explosion of retail investor trading just 4 years ago. To give you an idea of how much they've actually moved, well, shares of the Opendoor Technologies have skyrocketed more than 170% over the past 5 trading days after being crowned this season's meme stock by traders on Reddit's Wall Street Bets. So in just 30 days, the shares have soared more than 500% and trading as high as $3.11 at the time of writing. It was previously known as a penny stock. So let's dive a little bit deeper into what's driving momentum into this stock. Well, what you need to understand is that as of this week, investors are continuing to pile into the stock. And that is as they've found a sudden fandom among retail and traders and social media platforms. The stock's triple-digit surge sent shares soaring to as high as $4.97, well above the $1 level that it was bouncing around for the last few months. In fact, the stock was halted for 10 minutes during Monday's trading session after the stock crossed the Nasdaq's volatility limit, which is usually triggered when a stock's share price moves too far and too quickly, depending on the per share value of the stock. It was also listed as the top most actively traded stock on StockTwits Monday afternoon, after it was heavily cited by posters on Reddit's Wall Street Bets thread. So roughly 1.9 billion Opendoor shares had exchanged hands on Monday's trading. That's more than 1,700% of the 3-month average. So your question earlier today was, what or who is Opendoor? Well, they're basically the leader in iBuyer real estate technology that made its public market debut back in 2020 through a SPAC. Now, the key to Opendoor's plan is that it makes it easy to sell a home. Have you sold a home before, Ryan?
Yeah, it can be quite tricky.
Yeah, it can be tedious. It can be hard to just navigate through the different paperwork and just walk through the entire process with a realtor. So it gives sellers, I'm talking about Opendoor, a cash offer and can do that transaction very, very quickly.
Wow.
Now, that offer is going to be less than what the home could be sold for. It was fixed up and sold the traditional way. So that is where Opendoor is attempting to build its profit.
Yeah, I'm just looking at the write-up on iBuyer, what they also call instant buyer. So you get matched with algorithms and you get your property value and generated offers within 24 to 48 hours.
That's fantastic.
So no more waiting for weeks and days, maybe. So yeah, if it works, it works. Yeah, great.
Exactly. Yeah, so it seems like a probable and a very promising strategy to adopt here, because after all, they're using AI and algorithms to help, both buyers and sellers purchase a home or to make certain purchases. And through that, iBuyer or Opendoor would basically make light repairs and flip them back onto the open market to hopefully resell at a profit.
Yep.
So we're at some of the biggest real estate giants like Zillow and Redfin that were playing within the same field back in 2021 and 2022, but then they stepped out of it and returned to their core offerings, considering how, they were not doing as well as how Opendoor was doing or faring. So Opendoor's shares peaked at about $39 back in February of 2021 for a market cap just above $22.5 billion. $39, and it stands at about $3 today, Ryan. How does that make you feel?
It sounds like they've been on the roller coaster ride already.
Yeah.
So now you've got a second round of pretty wild swing. So what's going on? So where are we going from here?
Okay, so Opendoor has been the subject of chatter among retail traders on social media in recent days after Eric Jackson, he's the founder of Toronto-based hedge fund EMJ Capital. He made a series of posts on social media platform X encouraging buying. According to Jackson, the stock could be 100-bagger over the next few years. Now, the term refers to stocks that return $100 for every $1 earned.
Yeah, that's a big claim. Of course, anyone can say these things. I suppose some folks are buying into it a bit more.
Yep.
So, once again, it is a claim. It remains to be seen whether they can meet it in so-called a few years. I'm not sure how many years it needs. But anyone can say these things.
And he did a comparison to Carvana. I don't know if you heard of that company.
Yeah, quite popular as well.
Yeah, so they appeared on the brink of bankruptcy back in 2023, but they cut costs, stabilized, and eventually the stock went up 100 times more than what it was settling for. So I suppose this was his argument, this was his ground, and he said that Opendoor could be in the same position and forecasted that it will report positive EBITDA for the first time next month, which he says could revive Wall Street's faith in the stock. So nothing has fundamentally changed or improved for the company since Jackson's purchases. Opendoor still remains as a cash-burning, low-margin business with marginal near-term growth prospects. What has just changed dramatically is Jackson's online influence and the size of his following, especially on Reddit. So it comes pretty timely as well because, they were set to be delisted on the Nasdaq because it traded below $1 for 30 consecutive business days, and the company had 180 days to increase its share price to meet the listing standards. So this probably gives some hope, but a lot of speculation here. And given that, part of Jackson's thesis is that the company faces no true competition now, since Zillow and Redfin has exited the iBuyer game, nothing is really solidified and there is no certain proof for their future prospects as of now. Essentially, there are a lot of concerns as well, especially when it comes to their balance sheet. That's where a lot of the heavy lifting is taking place for Opendoor, since they will be using debt to buy a house. And if they can't sell the house, then that would pretty much put them in a tough position. So having considered all factors and just looking at how they've performed over the few days, I'm going to go with a nod.
Yeah, I'll join you there. I'm not a big fan of meme stocks. So this company has pretty much few or little assets to work with. It's pretty much a platform matching other players. So with the backdrop of the economy, no one's really rushing to buy houses and so on. So I'm not so hot about this one.
Yeah, it's a tough one, really. And across the board, TipRanks, Yahoo, and Barron's are all giving a consensus rating of a hold or neutral.
But then it's quite tough when you see its stock price going up, and then you're wondering, should I be just rich instead of right? Sometimes fundamentals don't make sense.
Yeah, that's a fair point. And of course, please do your due diligence. After all, it's a meme stock that's set to rise and fall really quickly. Now, Ryan, that pretty much wraps up for our analysis of today's Stock in Focus, Opendoor. Back in 2019, Opendoor homes were visited over 1.5 million times. Guess what? That's nearly 5,000 houses visits per day.
Okay.
So that's thanks to their mobile app that makes it easy to unlock the front door and self-tour Opendoor listed homes anytime between 6 a.m. and 9 p.m.
So you open it yourself.
Yeah, pretty cool, huh? You don't need an appointment, and it's 7 days a week. So what's the cheapest part of a house, Ryan?
The door?
No, the roof tiles, because they're on the house. Okay.
Not bad.
How many ends does it take to rent a house?
I don't know.
10 ends. Tenants.
Not bad.
And that's all we have for Opendoor.
Before acting on the information on Money FM, Please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.